Is every month like a constant struggle with bills payment piling up? Do you feel like not opening the bills? Are you thinking of ways to avoid it? If answer to any of these questions is yes, then you are certainly heading for debt consolidation. Debt consolidation offers great support to self-employed while budgeting and making financial decisions. An individual who operates a business or a profession as a proprietor, consultant, independent contractor, freelancers, or someone in changeable employment, then you are a self-employed. Debt consolidation for self-employed was traditionally considered expensive and difficult to obtain. With more than 15% of UK being self-employed, the perspective has changed. Self-employed are a very financially viable class. The cases of self-employed debt consolidation have become considerably high. Does debt consolidation for self-employed make sense? Certainly. The debt consolidation for self-employed is similar to any usual debt consolidation. It consolidates the smaller loans into a single loan. Debt consolidation for self-employed: you can fuse unsecured loans, utility bills, medical bills, or any other outstanding bills into a single debt consolidation loan. This debt consolidation loans has lesser interest rate and one single monthly payment for all the loans. So instead of paying separately on every loan, you save money by paying on this low-interest debt consolidation loan. The monthly payments are usually lower, thereby making it possible for self-employed to meet their obligation each month. Debt consolidation for self-employed is usually of two kinds: secured or unsecured debt consolidation. Unsecured debt consolidation will serve well for those self-employed who can offer no security for their loan amount. Unsecured debt consolidation will have higher interest rates than its secured sibling. Secured debt consolidation requires security: home, car, real estate, etc. With home equity debt consolidation, the security is in the form of home. This brings better rates, lower monthly payments, convenient terms, and approval for bigger amounts. With secured debt consolidation, a self-employed must be aware that he can affect the loss of his property in case of non-repayment, though that is the last resort. Self-employed can use debt consolidation for the purpose of recovering credit. When you make payments on time, it reflects in your credit. Since monthly payments are lower with self-employed debt consolidation, you are less likely to miss your payment and therefore improve your credit. How is debt consolidation for self-employed different? Debt consolidation for self-employed differs with respect to documentation. A lender looks for steady income as proof of the return of loan. Self-employed usually does not have any paychecks to offer and no regular income, and also no third party to verify income. A self-employed, in order to avoid taxation, usually do not declare their complete income. Therefore, self-employed debt consolidation depends upon income tax returns. Self-employed should be ready to produce income tax returns for 2 years. There are lenders who offer debt consolidation to self-employed with limited documentation or no documentation. However, this is true to some extent, but no or reduced documentation debt consolidation will be compensated by comparatively higher interest rates. Is there a threat to debt consolidation for self-employed? The threat is usually in the form of the self-employed revisiting old borrowing ways. Getting off debt can stimulate a spendthrift indulgence in a self-employed. This can neutralize the whole purpose of debt consolidation. A self-employed looking for debt consolidation should understand that debt consolidation is trying to address something: your money spending habits. If one can't take heed of this reality, then they are only leading themselves to further debt condition. A self-employed must see to it that no further financial risks are undertaken after debt consolidation. Debt consolidation for self-employed considerably reduces the monthly outgoings. This leaves self-employed with free money and scope for improvement of lifestyle. This provides further boost to economic condition. More available income means either more savings for investment in industry and people in jobs. Debt consolidation for self-employed is not an innovation in the loan market. However, it can offer innovative answers for your personal debt condition.